Welcome to the Rick Helps Real Estate Show, the weekly edition, along with a reminder that there are only 362 days left until Christmas. So start your shopping now. And some of you do that. But for us real estate agents, this is also the time of year that we get our union dues bill. Yes, that's right. We have to. They're association bills, not union dues. Geez. I have to pay $150 for the Southeast Chapter, Realtor Association, $175 for the Arizona Association of Realtors, and $156 for the National Association of Realtors, and a $45 National Association of Realtors assessment. I don't know what that is, but how nice of them to send that every December when we're all just flush with cash. So here we are looking ahead to next year once again. January is right around the corner. And there's numbers that I like to follow based on this year's performance and things that I saw. Okay, now let me see what happens now as we go into the first quarter. Because those of you that watched me for a long time may remember that last December, I was saying January is not going to be as exciting as everybody thinks it's going to be. We're not going to see 4 to 6 rate cuts, in my opinion. We're not going to see bidding wars. Interest rates are not going to come flying down. We're going to see a lot of inventory hitting the books in January, and they're not going to be moving very fast. People are going to be disappointed, and they're either going to let the listings expire or they're going to pull them off. And lo and behold, check this out. This is how many cancellations that we had year-to-date total, 21,702. Now we have to ask the question, coming into January, how many of these are going to come back? So I'm going to be watching this closely. Are they going to say, okay, well, it's a new year. Interest rates are a full percentage point lower this January to last January, but you can see that a lot of these cancellations happened over the course of the year. But how many people are going to give it the old college try and say, okay, it's a new year, let's do it again. Rates are lower, let's put the house back on. We didn't get the price last year. Maybe this is our year. And then see how many cancels we start getting around March. But I think this one is probably not going to do a lot of spiking in January. What we're going to look here is the Cromford Market Index is headed up. But this is a direct result of inventory being down. And when I say down, I mean inventory is way down when it comes to new listings. So our new listings chart that I track, it's always kind of fun to look at it in the holidays. You can see that the black line is the number of new contracts. It's starting to climb its way back out. And new listings is way down here. Just the lowest I've seen in a long, long time, but just the way the week turned out. Christmas on a Thursday. Nobody listed their house. This is a 7-day moving average. So I'm going to watch this number. I'm going to see how fast is this going to spike up. I think it's going to spike up pretty doggone fast going into January. Cromford Market Index by city. You can see that just about all of them, with the exception of Paradise Valley, are green. All that means is they had less inventory this week than they did last week, and sales remained relatively the same. The Cromford Market Index is a measure of supply and demand. It's a proprietary number that they put together, the Cromford Report. Anything over 110 is considered a seller's market. Anything below 80 considered a buyer's market. And you can see that Santan, Queen Creek, Surprise, Buckeye, Maricopa. Maricopa's been holding the bottom prize there for most of the year. And that's driven primarily by all the new construction that's out there. Same with Buckeye. And so there are some sellers out there that are trying their best to get their house sold, and they got a lot of competition. So we're going to watch this number. I don't know where this is going to go. I think for the first quarter, we're seeing the Cromford Market Index is starting to come up. I think it's going to climb a little bit, but I think it's going to flatline very quickly. If we start getting a lot of new listings in January, you can expect to see this number, this chart, come in about, I want to say here, a little lower than last year, go up a little bit, and then kind of flatline. Now, whether or not it goes up or goes down, depends on what kind of February and March we have. A lot of things out there happening that can change that. Active listings, total active listings, as you can see, went down. Again, that affects the Cromford Market Index. So where are we going to be next year? Well, we're going to start out right here. And every year we tend to go up a little bit in January. I'm expecting this January to mirror what we saw last year. We didn't see a whole lot 22 and 23, but 24 we did. We kind of went up a little bit here. But I'm expecting us to be about here. I honestly think we're going to hit about 27,000 listings by February. You can hold me to that. I will bet you an entire dollar. Here's another one to watch here, which is pending listings. I'm going to move my head here, right about there. You can see that we have matched week after week with 2024 in our pending listings. 4,045 this year, 3,933 last year, or 13. And so that is a number that says, okay, we're going under contract. And they tend to start writing offers in January. But they're writing offers against a much bigger pool of inventory. But pending listings do climb year after year. And I expect to see that as we go. And I'm going to watch it and see what happens. Now, this is sales per month. Now, this always looks like, oh, January is terrible. No. This is actually December, folks, because this is when they closed. They wrote these contracts back here in December when things were really low. Inventory is very low. And then they closed in January. So the January numbers up until February on sales per month actually look pretty crummy until we start digging out of it. So the January numbers start showing up in February. You following me? So that's going to be an interesting one to look at. And of course, all eyes are going to be on interest rates. So we follow this every week. Some people follow it every day. But we peaked last year at 7.1 back in December, January. And then we got down to now we're sitting here at 6.20. This is a national average. It's a survey. You can find rates in the high fives, FHA. So that's very encouraging for some of you buyers that are waiting to get some lower rates coming your way. And I think that that's going to be driving the bus. Now, are we going to see rates come down in January? Because there's another meeting, Fed meeting in January, and I'm going to say no. One of the reasons I say no is right here. Before I show you this, I'll tell you, a lot of people have been telling me, Rick, they got a recession coming. A recession is on its way. Watch out. Lots of job losses. They're going to be forced to lower rates. Prices are going to come crashing down. People are going to list their houses. Okay. GDP just came in at 4.3 September quarter. Q4, Q3 came in at Q2 at 3.8. The next release is going to be January 22nd. Federal Reserve is going to be very interested in what our GDP is doing. This is driven primarily by we had more exports, less imports, and consumer spending was very strong. Consumer spending for this holiday season was also very strong. I'm thinking GDP for the fourth quarter, which will be announced in January, will be higher than 4.3. How high? Maybe as high as 5. That doesn't say, holy cow, we got to lower rates. Things are looking bad. So it depends. It also depends on the job losses. Job losses are very hard to track right now. What are the job losses? Are they all federal jobs or are they AI jobs? I mean, it's been kind of muddy because of the government shutdown. So that's going to start washing itself out. Maybe. What if we have another government shutdown January 31st? This is going to be a wild year, folks. And something that shouldn't be wild is an article here that says owners of newly built homes may struggle to break even on a quick sale. Knock me down with a feather. Really? The only time it hasn't been a struggle in a quick sale was 2021, when you could buy a house today and sell it for more tomorrow. It always takes time to dig out, especially new builds, folks. In new builds, what you see is they layer in all these incentives. They're going to buy down your rate. They're going to give you some appliances. They're going to give you some money off on the asking price. They're going to give you updated ceiling fans and tile. And then when you go to sell, financially, you can't offer any of that stuff. So you already got to dig out of that financial hole. You just have to wait till the whole development closes out and wait. Don't buy new construction if you're not planning on staying there at least, in my opinion, 5 years. So thinking you're going to turn around in a couple of years, don't do it. I remember I had a gentleman that was in the Air Force, coming out to Luke Air Force Base. He wanted to buy a house one year, and I said, how long are you going to be here? He said, well, probably 2 years. I said, don't do it. And I don't know if he bought a house. I said, that's just my personal advice. You know, real estate could go up and you could do very well, but you could end up owning that sucker for a while. You know, I would say at least 5 years. But if you know you're only going to be here 2 years, don't sign up for that. Here's another noteworthy story. This is going to be a battle all year with Zillow. This is going to be the year of lawsuits in the big portals, Zillow and Compass. Compass owns Century 21, not Remax. I'll spit out a few here. But they're kind of going after each other. But on the back end of this, Zillow's being sued because consumers are saying, I didn't know when my realtor got a commission on this sale that he was paying Zillow 40% of that commission. They're calling it a kickback. It's not a kickback. It's a referral agreement. And it's in the wording in Zillow. You can see it. You got to dig for it. But it's a referral fee. Referral fees are very common in real estate. But they're getting sued because people don't feel like it's very ethical. On top of that, and here's where the big lawsuit's coming in, realtors are, when they partner with Zillow, they're encouraged to use their Zillow's in-house mortgage company. And you can see by the headline here, borrowers who use Zillow home loans pay more, study suggests. Yikes. Shopping for a mortgage, I think it should be done with a mortgage broker who can look at a whole list of lenders. Look at what your situation is, call you up and go, okay, I did some digging. Here's some programs that'll fit for you. And you guys discuss the fees and their rates. Sometimes when you go with places like Zillow Home Loans, they have one rate. You go to Rocket, they have one rate. You go to what's called a bank, a mortgage company, People's, they have one rate. Mortgage brokers have up to hundreds. People like Pat, people like Dan Frio, they can show you all kinds of different rates. But here's the kicker on this one. The realtors that pay thousands a month, some about $1,500, $2,000, some brokerages paying thousands a month towards Zillow to be a part of the Zillow Flex program. We're getting leads sent to them. And they're upset because they're monitoring the entire process. Your emails going back and forth. How many times did you bring up, suggest to use Zillow Home Loans, huh? If you're not doing it enough, they started cutting off the realtors. You're not sending enough to our bank, so you know what? We're going to cut you loose. One lady in particular said they completely dropped her from the Zillow Flex program. This is a huge lawsuit, and we're going to see it kind of come to head somewhere around July. And so this is going to be the year of portal wars, the big ones, Realtor.com, Zillow, Redfin, a much tighter attempt at consolidation in the industry that you as a consumer, you're not going to see it, feel it, smell it. But those of us in the industry, we're going to be watching it closely. It's going to be an interesting year. So stay tuned and do me a favor. If you want to see this right here in your inbox every Monday morning, I include this in my email along with their commentary. Also, a mortgage report, a detailed mortgage report, a detailed mortgage or market outlook report from the Cromford market people. And it shows up every Monday morning at 7 o'clock. The link is in the listing or in the description down below. Click on that tonight and you can get it tomorrow morning. A little QR code, you see there's my data store. If you want to know what's going on in your zip code, or your neighborhood, or your subdivision, simply tell me. I can send you a detailed report, get that right out to you. I've sent about 160 right now, so why aren't you on that list? Hope everybody had a great Christmas. We're off to the races. Expect a lot of changes in this show next year. Nothing major, but I'm going to be having a lot of guest speakers. One that I'm lining up for probably the first week of January. There's a gentleman in Gilbert that's been very involved in this whole water problem, the billing issues, and I really want to wrap my heads around. He has agreed to be on the show and share what he knows. He's been to every city council meeting, the back end meetings. I want to know what's going on there, and I know you do too. So stay tuned. I'm going to be doing a lot of that this year, and I hope you stick with us. Thanks. Have a great day.